What if you could learn data science, AI, cybersecurity, cloud computing, digital marketing, and even project management completely free? No fees, no catch. And yes, you get a certificate too. Welcome to Omni Academy, Pakistan's leading IT training institute since 2010, part of MHSG Consulting Group, helping thousands build real-world skills and land jobs. Every month, Omni Academy offers 50+ free workshops taught by industry experts covering everything from AI and cloud to cybersecurity, networking, and more. Whether you're a student, a professional, or just starting out, there's something for you. Join online from anywhere in Pakistan, Karachi, Lahore, Islamabad, or beyond. So don't wait. Register now at omniacademy.com and secure your spot today. Omni Academy, your career transformation starts here, and it starts free.
Hello everyone, and welcome to today's free workshop on ISO 31000 Risk Management. Protect what matters. Thank you for joining us. No matter what industry you're in, banking, healthcare, manufacturing, education, IT, construction, oil and gas, government, or even if you're running your own business, risk is something you face every single day. Every decision you make carries uncertainty. Sometimes that uncertainty creates opportunities. Sometimes it creates losses. The organizations that succeed aren't the ones that avoid risks. They're the ones that understand risks, prepare for them, and manage them effectively. That's exactly what ISO 31000 helps organizations achieve. Today's workshop is designed for students, fresh graduates, project managers, team leaders, compliance professionals, auditors, business owners, risk officers, quality professionals, anyone interested in organizational management. You don't need any previous experience with risk management. We'll start from the basics and gradually move toward practical implementation. By the end of this workshop, you'll understand what ISO 31000 is, why organizations adopt it, the principles of effective risk management, the ISO 31000 framework, the complete risk management process, risk assessment techniques, risk treatment methods, real business examples, career opportunities, certification pathways. Most importantly, you'll learn how organizations protect their people, assets, reputation, finances, and future. So grab your notebook, eliminate distractions, and let's begin this exciting learning journey. Module 1: Understanding Risk. Let's begin with a simple question. What is risk? Most people immediately think about danger. But according to ISO 31000, risk is much broader. Risk is the effect of uncertainty on objectives. Notice something interesting. Risk isn't always negative. Risk can also create opportunities. For example, a company launches a new product. Possible risks include poor sales, production delays, customer complaints. Possible opportunities include higher profits, market leadership, brand recognition. Both outcomes involve uncertainty. That is risk. Now think about everyday life. When you drive to work, you face traffic accidents, weather changes, road closures, vehicle breakdowns. Yet you still drive. Why? Because you manage those risks. You wear a seatbelt, maintain your car, follow traffic rules, check weather forecasts, choose safer routes. That's risk management. You're reducing uncertainty before it becomes a problem. Organizations do exactly the same thing, but on a much larger scale. Every business faces risks related to financial losses, cyber attacks, natural disasters, supply chain disruptions, employee safety, equipment failures, regulatory compliance, reputation damage, market competition, technology changes, economic instability, political uncertainty, customer satisfaction, legal issues, operational failures. Risk is everywhere. Ignoring it doesn't make it disappear. Managing it makes organizations stronger. One of the biggest strengths of ISO 31000 is its flexibility. It is not limited to one specific industry. A hospital, a software company, and a manufacturing organization may face completely different risks, but the same risk management principles can help all of them. ISO 31000 allows organizations to customize their approach according to their own business goals, industry requirements, organizational structure, available resources, risk environment. For example, a financial institution may focus more on fraud prevention and regulatory compliance, while a construction company may focus more on safety hazards and project delays. The framework remains the same, but the application changes according to the organization's needs. The main goal of ISO 31000 is not to eliminate all risks, because risk is a natural part of every activity. Every decision involves some level of uncertainty. A company launching a new product faces market risk. A business expanding internationally faces operational risks. A technology company developing new software faces security risks. Avoiding all risks would mean avoiding growth and innovation. Instead, ISO 31000 helps organizations make informed decisions by understanding risks before taking action. It encourages leaders and employees to ask better questions. Instead of asking, "What went wrong?" organizations start asking, "What could go wrong?" and more importantly, "What can we do today to reduce the impact tomorrow?" This change in mindset is what creates stronger and more resilient organizations. Organizations that understand risks are better prepared for challenges. They can respond faster during unexpected situations. They can protect their employees, customers, reputation, finances, and future growth. Another important aspect of ISO 31000 is that risk management is not only the responsibility of a risk department. Everyone within an organization plays a role. Employees identify problems. Managers make decisions. Leaders create policies. Teams implement controls. Together, they build a culture where risks are discussed openly and managed effectively. In today's rapidly changing world, organizations face new challenges every day. Technology evolves, markets change, customer expectations increase, cyber threats become more advanced, regulations become more complex. Without proper risk management, organizations may struggle to adapt. ISO 31000 provides a foundation that helps organizations stay prepared, flexible, and confident while dealing with uncertainty. By implementing ISO 31000 principles, organizations don't just protect themselves from problems. They create better opportunities, improve decision-making, and build long-term success. That is why risk management has become an essential skill for professionals and organizations across every industry. What is ISO 31000? Now, let's understand ISO 31000. ISO stands for the International Organization for Standardization. This organization develops internationally accepted standards that help businesses improve quality, safety, efficiency, and consistency. ISO 31000 specifically focuses on risk management. Unlike some standards that require certification, ISO 31000 is a guidance standard. Its purpose is to help organizations establish a structured approach to managing risks. It can be applied to small businesses, large enterprises, government departments, universities, hospitals, banks, manufacturing industries, construction companies, technology firms, non-profit organizations, startups. In fact, any organization that has objectives can use ISO 31000. One of its biggest strengths is flexibility. ISO 31000 isn't industry-specific. Instead, it provides universal principles that every organization can adapt. The goal isn't eliminating all risks. That's impossible. Instead, the goal is making informed decisions. Organizations become proactive instead of reactive. Instead of asking what went wrong, they begin asking what could go wrong. And even more importantly, what can we do today to reduce the impact tomorrow? That mindset creates resilient organizations. Principles of ISO 31000. ISO 31000 is built around several key principles. These principles ensure risk management creates value instead of becoming paperwork. Principle 1. Risk management creates and protects value. Its purpose is helping organizations achieve objectives. Principle 2. It becomes part of decision-making. Major decisions should always consider risks.
Principle 3. It is integrated into organizational activities. Risk management isn't only the responsibility of one department. Everyone contributes. Principle 4. It addresses uncertainty. Organizations rarely have complete information. Risk management helps make better decisions despite uncertainty. Principle 5. It is systematic and structured. Random decisions often create bigger problems. A structured process improves consistency. Principle 6. It uses the best available information. Historical data, expert opinions, industry reports, performance metrics, audits, customer feedback, market research. Everything contributes. Principle 7. It considers human behavior. People influence risk. Communication matters. Culture matters. Leadership matters. Training matters. Principle 8. It continuously improves. Organizations evolve. Markets change. Technology advances. New threats emerge. Risk management must evolve. ISO 31000 Framework. Now that we understand the principles of ISO 31000, let's move on to its framework. Think of the ISO 31000 framework as the structure that helps organizations put risk management into practice. While the principles explain why risk management is important, the framework explains how to make it part of everyday operations. A successful risk management system doesn't happen overnight. It requires leadership, planning, resources, communication, and continuous improvement. Let's look at each component. 1. Leadership commitment. Risk management starts at the top. Senior management and organizational leaders play the most important role in creating a culture where risk management is taken seriously. If leadership actively supports risk management, employees are more likely to follow the same approach. Leaders should define the organization's risk objectives, approve policies, allocate budgets, and encourage employees to identify and report risks without fear. Example: bank. A bank's executive management regularly reviews cybersecurity reports and invests in advanced fraud detection systems. Because leadership prioritizes security, the bank reduces financial fraud and protects customer trust. Leadership sets the direction, but every employee contributes to making risk management successful. 2. Integration. Risk management should not be treated as a separate department or an occasional activity. Instead, it should be integrated into every business process, including planning, operations, finance, human resources, procurement, and project management. When risk management becomes part of everyday decision-making, organizations can identify potential issues before they become major problems. Example: hospital. Before introducing a new medical procedure, hospital management evaluates patient safety risks, staff training requirements, equipment readiness, and regulatory compliance. Risk management becomes part of the decision-making process rather than an afterthought. 3. Policy. Every organization should have a clear risk management policy. This policy explains the organization's commitment to managing risks and outlines the responsibilities, objectives, and approach that everyone should follow. A good policy ensures consistency across departments and helps employees understand how to respond to risks. The policy should be reviewed regularly to reflect changes in business goals, regulations, and industry standards. 4. Resources. Even the best risk management plan cannot succeed without adequate resources. Organizations need to invest in skilled employees, training programs, technology and software, risk assessment tools, financial support, and time for planning and reviews. Providing the right resources enables employees to identify, assess, and manage risks effectively. IT company. An IT company invests in cybersecurity software, cloud backup solutions, employee awareness training,
and continuous system monitoring. These resources reduce the likelihood of cyber attacks and improve business continuity. 5. Roles and responsibilities. Risk management is everyone's responsibility. While senior management provides direction, managers supervise implementation, and employees identify and report potential risks during their daily work. Clearly defining roles prevents confusion and ensures accountability. For example, executives establish strategy. Department managers monitor operational risks. Employees report incidents and follow procedures. Internal auditors review the effectiveness of controls. When everyone understands their responsibilities, risk management becomes more efficient. 6. Communication. Effective communication is one of the most important parts of the ISO 31000 framework. Organizations should encourage open communication about risks across all departments and management levels. Employees should feel comfortable reporting hazards, weaknesses, or incidents without fear of blame. Regular meetings, reports, training sessions, and awareness campaigns help ensure everyone stays informed. For example, manufacturing company workers notice that one production machine is overheating. Instead of ignoring the issue, they immediately report it to supervisors. Maintenance is performed before the machine fails, preventing costly downtime and improving workplace safety. Good communication allows organizations to solve problems before they become major incidents. 7. Monitoring. Risks change over time. New technologies emerge. Markets evolve. Regulations change. Customer expectations shift. This is why organizations must continuously monitor their risks and the effectiveness of existing controls. Monitoring includes reviewing reports, conducting audits, analyzing incidents, tracking key performance indicators, and updating risk registers. Regular monitoring ensures that risk management remains effective and relevant. 8. Continuous improvement. Risk management is not a one-time project. It is an ongoing process of learning, adapting, and improving. Organizations should regularly review their risk management framework, learn from incidents, collect employee feedback, and update procedures based on new challenges. Continuous improvement helps organizations remain resilient and competitive in a rapidly changing environment. For example, after experiencing a data breach, a company may strengthen its security controls, improve employee training, and update its incident risk management process. 45 minutes voiceover. Now that we understand the ISO 31000 framework, let's explore the risk management process. This is the practical step-by-step approach organizations use to identify, assess, and manage risks. Think of it as a continuous cycle that helps businesses stay prepared for uncertainty. 1. Communication and consultation. Communication is the foundation of effective risk management. Organizations should involve employees, managers, customers, suppliers, regulators, and other stakeholders throughout the process. When people share information and concerns openly, risks can be identified earlier and better decisions can be made. Example, before launching a new product, a company consults customers, technical teams, and suppliers to identify possible risks. 2. Scope, context, and criteria. Before assessing risks, an organization must clearly define what is being evaluated. This includes understanding business objectives, internal and external environment, legal and regulatory requirements, risk evaluation criteria. Having a clear scope ensures the assessment focuses on the right priorities. Example, a hospital assessing patient safety will focus on medical procedures, staff, equipment, and healthcare regulations. 3. Risk identification. This step involves identifying anything that could affect the organization's objectives. Common methods include brainstorming, team discussions to identify possible risks, SWOT analysis, identifying strengths, weaknesses, opportunities, and threats, interviews, gathering expert opinions from employees and stakeholders, checklists, reviewing standard lists of common risks, incident reports, learning from previous accidents or failures, process mapping, examining each business process to find weak points, historical data, using past records to predict future risks, site inspections, physically inspecting workplaces to identify hazards. The goal is to create a complete list of potential risks before they occur. 4. Risk analysis. Once risks are identified, they are analyzed to understand their significance. The organization evaluates likelihood. How likely is the risk to occur? Impact. What would be the consequences if it happens? Existing controls. What measures are already in place to reduce the risk? Risk rating. Combining likelihood and impact helps determine whether the risk is low, medium, high, or critical. This helps organizations prioritize their efforts. 5. Risk evaluation. After analysis, organizations decide which risks require action. Questions include: is this risk acceptable? Does it need immediate treatment? Can it be monitored? Should more controls be implemented? High-risk issues usually receive priority, while low-risk issues may simply be monitored. 6. Risk treatment. Once risks are evaluated, they are treated or mitigated. Options may include avoiding the risk, reducing the likelihood or impact, transferring the risk, or accepting it with appropriate monitoring. This comprehensive process enables organizations to address risks in a systematic way, ensuring resilience and the ability to thrive in a changing environment. Risk treatment. Risk treatment involves selecting the best response for each identified risk. Common options include: avoid, stop the activity causing the risk; reduce, implement controls to lower the likelihood or impact; transfer, shift the risk to another party, such as through insurance or outsourcing; accept the risk if it falls within acceptable limits; exploit opportunities. If uncertainty presents a positive opportunity, organizations can take advantage of it to gain business value. The chosen treatment depends on the organization's objectives and risk tolerance. Monitoring and review. Risk management is an ongoing process. Organizations must regularly review risks because business conditions, technology, regulations, and market environments continue to change. Regular monitoring helps ensure that existing controls remain effective and that new risks are identified promptly. Recording and reporting. Every stage of the risk management process should be properly documented. Documentation includes risk registers, assessment reports, treatment plans, monitoring results, review findings. Proper records improve accountability, support audits, help management make informed decisions, and drive continual improvement. Practical business examples. Example 1. A bank. Risks: cyber attacks, fraud, ATM failures, regulatory penalties. Treatments: firewalls, MFA, employee awareness, incident response plans. Example 2. Hospital risks: medication errors, equipment failures, data breaches, patient safety incidents. Treatments: staff training, preventive maintenance, clinical protocols, access controls. Example 3. Construction company risks: workplace accidents, material shortages, project delays, weather disruptions. Treatments: safety audits, PPE, backup suppliers, schedule contingency. Example 4. Software company risks: system downtime, data loss, security vulnerabilities, missed deadlines. Treatments: backups, cloud redundancy, secure coding, project planning. Common mistakes discuss: ignoring small risks, poor communication, no documentation, no management support, infrequent reviews, treating compliance as the goal, failure to learn from incidents, lack of employee involvement. Careers in risk management. Career opportunities include: risk management officer, enterprise risk manager, compliance officer, internal auditor, governance specialist, business continuity manager, operational risk analyst, information security risk analyst, financial risk analyst, HSE risk specialist, quality assurance manager, corporate governance consultant. Industries hiring include: banking, healthcare, aviation, manufacturing, telecom, government, insurance, logistics, oil and gas, IT, construction, education. Discuss the skills employers look for, such as analytical thinking, communication, decision-making, regulatory knowledge, and familiarity with standards like ISO 31000. Today, we've covered a complete introduction to ISO 31000 risk management. You learned that risk isn't only about threats, it also involves opportunities. You explored the principles, framework, and complete risk management process. You discovered how organizations identify, analyze, evaluate, treat, monitor, and communicate risks. We also looked at practical examples across different industries, learned how to build a risk register, discussed common mistakes, and explored career opportunities. Remember, effective risk management isn't about eliminating uncertainty. It's about making informed decisions, protecting what matters most, and building resilient organizations that can adapt to change. Whether you're a student, a professional, or a business owner, these concepts can help you make smarter decisions and contribute more effectively in your career. Thank you so much for being part of today's workshop. I hope you've gained valuable insights into the world of ISO 31000 risk management. If you're ready to take the next step, Omni Academy offers comprehensive instructor-led training designed to help you build practical skills, work on real-world case studies, and prepare for professional certification. As a thank you for attending this free workshop, you'll receive 20% discount on our complete ISO 31000 risk management training program, valid for the next 7 days. Access to expert trainers who bring real industry experience, hands-on exercises, templates and practical learning resources, and guidance on certification and career development in risk management. To stay updated with free workshops, career opportunities, and internship openings, visit the Omni Jobs and Internships portal and subscribe to the Omni Jobs WhatsApp channel for the latest opportunities delivered directly to your phone. If you found this workshop helpful, share it with your colleagues, classmates, and friends, because understanding risk is a skill that benefits every profession. Thank you once again for joining us. We look forward to seeing you in our upcoming workshops and certification programs. Stay safe, keep learning, and remember, the best way to protect what matters is to prepare before risks become reality.